Hello guys, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Daily Stock Market Analysis Show. We look at what happened in the market during the day and what we can learn from it and how we can plan for a better trade. That's the aim for this analysis. And this is analysis for December 7th, Wednesday 2022 tomorrow. So we had a post, we had a small pullback continuation that happened today, but very small one, and it has taken a support at a trend line, and that's just because we have an RBI event and the market is eager to hear the outcome of that before it can react to it. So it's a rally or a pullback, you never know. Let's try to find the answer for that from the charts. Let's start with the charts. Let's switch off this, and this is a trend line that I was talking about, right? On a daily charts, we have a small trend line. Remember, we have a weekly breakout. That's still valid, right? We are talking about it has confirmed multiple times on the weekly, right? It is long back, multiple weeks of confirmations coming. We are talking about trend line within a daily candle here. So the market today is close, very close to that support, breaching that. There is a change in polarity bonds that's possible. This is in order to have on the Banknifty, and this is another small body candle. Green because it closed above the opening. Initial dip was bottom, that's what it indicates. So it's very close to where the trend lines are. So that could act as a support. And in confluence, the change in polarity bounce for the previous resistance will act as support, and then a bounce up can happen. So that possibility cannot be ruled out. Right. So it's a very good support for a bounce, ready for a sound, and that's what we can infer from the chart. So how much of that? I'd say it is flat almost. 0.3% lost, just 58 points lost, and less than 200 points lost. That's 0.45% lost with the Banknifty. Right. Bollinger shows some early signals of consolidation, but the expansion still is in the expansion mode with the bullish bias, with the median 20 still support is there on the daily, on the Banknifty and the Nifty also. Nifty is showing small early signs of a contraction, but basically it's expanding only, right? Long term, it's just taking a pause. So if there is an anticipation of a small sideways movement that could happen. You don't know how small or how long it will be there, but it's a beginning of that. It's not confirmed. It does not fully straighten out. When the band is straightened out flat on up and down, then we can say sideways. But right now it is begun that consolidation sideways movement, but it's still in the upside expansion, or price move has a bullish bias as per the Bollinger levels. So that's it. So that's what the price action is indicating. Right? Inverted hammer on the Banknifty and a small body candle. Small bodies, inverted hammer also is a small body. Small bodies are also always indecisive. There is a big fight between bulls and bears. That's what indicates. Inverted hammer has a leg size on the upside, which says that there is spilling pressure there on the top. Huge resistance on that side. Right? Small body is indecisive. Right? So overall we are bullish, but we are at support prior to an event, and then we will outcourse depending on it. We could move down or we could bounce up from this level. That's where we are exactly. Right. Levels 18,778 resistance upside and 18,688. That's 18,888 is all-time high of the Nifty. And that's Fibonacci 78 extension level also. So that's the resistance number 2. So number 1 would be 18,778. Downside support would be 500 nearby, 18,500 nearby, less than 18,400 also. 450 zone is also a good support zone. Banknifty 44,340 is the resistance upside, and then 43,515 is the resistance all-time high after that. Downside you have 42,850 is the support downside pricing low, and 42,600 downside after that support. Bollinger Bands, we know that it's beginning the expansion, beginning the contraction, but it's basically still in the expansion mode, bullish bias. Momentum is bullish still, with RSI indicators showing above 60 moves, but it is falling today on both indices. It's a falling momentum, but it's or in the bull zone itself falling in the bull zones on the top. Trend line on trend indicator ADX also is saying that it's supposed to Day by post is one such bullish on both the indices, but it's having less strength in the case of Nifty and more strength in the Bank Nifty. Right? Pricing strength in the Bank Nifty. Right? Strength is strong in the Bank Nifty. Momentum is strong in the Bank Nifty. Momentum means strong in both indices. Momentum is strong, but falling momentum for a very short time basis. If you see. Right? So volatility bands of volatility indicator in the VIX is showing that a small spike up again has happened yesterday. Also, the small spike was there, and it's climbed above the 14. So it's the 14 VIX, which is still okay. Low VIX, you can say, but it has gone down to the 13 kind of levels and then bounced back to 14. Small spike of 2% more than that today. Right. Futures open interest is showing it's bullish. I'm sorry, cut my word. Futures open interest is showing it is a short build-up that happened today and a long unwinding Bank Nifty. So overall is bearish. Open interest levels look very interesting. 18,600 and 19,000. So that's where the highest put and call writing is written by for the expiry. That's the day after tomorrow, Thursday, weekly expiry talking about. 18,600 was the highest put writing zone today. Yesterday it was 18,700. Day before yesterday it was previous to previous trading day it was 800. So it's slowly dipping. The option writers are pulling back a little, but not too far. Right? But the resistance in 19 remains there. So it's going to be tough resistance to take out the 19,000 for this expiry for sure. That's very much clear. Look at the Bank Nifty's open interest. It's 43,000 is where the highest put writing, and that is where the highest writing is happening on the put side. And 43,200 is where the highest call writing is. And that's why December 8th expired. PC has dropped for the Bank Nifty a little bit. Now it has become equal, but not bullish enough. 0.71 and 0.58. Nifty and Bank Nifty has got the put call ratio. It's not bullish enough. Industry sector analysis, if you see, except the FMCG, which closed less than 0.5% up, all other sectors are closed at. IT has lost 1.5%. Atlas lost less than 1%. Farmers lost quite a bit, less than 1% again. Realty less than 0.7%. 0.4% auto like that. So all sectors red except for XMC, which shows us some green. From the moment perspective of short term, solid bullish momentum except for the farm and the auto, which is still in the sideways. So our sectors are still bullish, no problems there. Today's sector performances overall it was kind of flat sideways. None of the sectors performed greater than 1% of moves in none of the sector. Heavyweights, if you see HDFC and Reliance. So those are two, HDFC and Reliance are the two stocks two heavyweights that managed to close gains 0.3% up. All the other Infi, TCS, ICICI Bank all lost greater than 1%. HDFC and Kodak closed flat. So HDFC Twins and Reliance are the two stocks, only two stocks among all the five Kritik stocks that has got the bullish short-term momentum. That's around the sideways momentum. So that's what across the industry sector and across the major heavyweights, how they are performing when the market is taking a pause. Both the institutions are sold, but they're not sold big. 500 crores selling, 635 crores selling in the Fyers, and 550 crores selling in the which is okay. Small profit booking, you can say. No big sell-off has happened from either side, which is positive. But yeah, so there is a pause in this, in the buying mode. That's all that happened. Not a full stop. A small profit booking is what I would have seen. So that is not very encouraging, but positive that they didn't sell too much. Right? Moving on, crude has fallen, which is the biggest positive. That's why its market has been. It is less than 76, 2% down today. Trendline channel is what it is. Could not climb above the median of the trendline channel, middle of the trend. Could not move about that. It has fallen down. It's further falling down. Right? So 42% of fall of the has happened to the top, if you see, over the last 2 months. So that is good news. Gold has fallen, but dollar index has also cooled off a bit. It's in the near zones already. It's a red as of now, 104.9. 105 is not too far from the 120 multi-decade highs, but still it's okay. But the problem is the rupee. Rupee is shooting up, 82.37. Once again, it climbed about 82, and the moment is sideways. And today also it was rising 0.5% above, which is a concern. Right? Dollar is cooling off, rupee is not strengthening, and oil is cooling off, which is good. Gold is also was rising. It is trying to seek support and set resistance basically. Climb back to the resistance zone and sitting there and trying to hold on that push. But basically, momentum is bullish in the short term. So that's how the commodities and the currency markets doing. US index is something that we have to keep a close watch. It had a fall, Dow had a 400, 500 points of fall that happened. Our markets did not react that much and remain decoupled, resilient, whatever we say today, because of the event tomorrow. But you may react later on, you never know. But US market is interesting. Drawdowns has bottomed out. Just shown a clear red bearish candle in the last trading day. And the others S&P 500 and Nasdaq were also resisting and at the channel top, and it was also showing red, indicating a possibility of a reversal. So if that reversal is down move is going to be ferocious, then we are going to have trouble in our market. But we will also react with big falls and our night risk comes in. You have to keep a close watch of that tomorrow morning pre-market and take a decision accordingly. But tomorrow we have a local event, RBI policy event is their outcome, maybe 11 o'clock or something. So the volatility would be spiking up until the event is over, and after that it will crash. So it makes more sense to take the trade after the event is complete. The speech or outcome is digested by the market only, then take the trade. Otherwise, you should have the guts to take it before that and then wait for the crash. It's too risky. Stay out of major events is the policy. Right. We also have a jobs data that is coming tomorrow, but outcome of that could be coming in. On Friday or something. So it should not be okay, but it's the 2 events. Two stock picks. Sim is the cement stocks are doing, Sim is long. PNB Punjab National Bank is doing good. All the banks are doing good. So public sector banks especially are doing good. And it has been beaten down for several years. It's a breakout from rectangle pattern, and it seems to confirm the breakout, and momentum is spiking up, and the surrounding pattern as well. Any moves above the 100 would be ferocious, would be beautiful mega breakouts that may be happening, because all-time high for the Punjab National Bank is way above in the 300 nearby zone. So this may be the cheapest levels at which it can be available, but with the neckline of this as a stop loss, there is potential for swing and positional trades possible in this. Another pick is the Grasim, and cement stocks are doing good, and this is a rounding pattern which has been consolidating since several weeks now, and it is not given the momentum and seems to be moving in. So entry above the current handles high could give short swing trades. But remember, it has resistance on the upside, and stop loss has to be very tight here. But the momentum and the trend indicator is really show. Overall, the industry sector also is moving up. Right? So let's crossing industries to stop this. Now that we've seen all these different parameters and studied the market and charts and the commodities and the open interest and sectors and heavyweights and crude oil, this, that, institutional participation, everything. Now let's conclude and have a view for the next day. Then my view for the next day is mild bullish. Even though the market is full of, I'm mildly bullish. I may go wrong sometimes after the outcome of the RBI event. It may correct some more. That's possibility is there, but the chart is saying that it's still bullish. Mild bullish, not too much. It is doing a pullback. It is taking a support. You have big resistance upside. We understand that. So there could be resistance. There could be more pullbacks on this happen. But my view for tomorrow, as per the charts, is going to be mild bullish. Today, what happened is it's retraced a little more from yesterday. Last 3 days, it has been doing the same. Now it has found a trend line support, and then all the bands also have paused a little bit from last, both of them. Both the days have paused a little bit, but is still having a bullish bias. Right? Remember, we had a weekly breakout that was confirmed on multiple weeks before. So, weeks is cooled off. Institutions are not in the selling mode. We had all-time high in both the days that happened last week. We have the crude oil that is dropping like anything. Dollar index also is dropping, although the rupee is not improving. But all this, most of the things are positive. But the thing is, US market is at resistance and then showing some current bearish things after it has hit the resistance zone. Then you have to close watch on that. That's only threat and the currency. So otherwise, it looks fine. But VIX has fallen down substantially, and there is the inverted region could take it back, which could mean market should correct some more. All these possibilities are there. You don't rule out. You don't never know. Why is not that great since last 2 days? It has fallen from the 1 to 0.7, so it's not bullish enough. Neither it is bearish. Right? Anytime it can spike back to the 1 plus, and that can be bullish, but as of now, not bullish enough. So overall, that is all. Price action also saying that it's bullish, but not enough. Right? That's what the overall essence of the study is saying. So tomorrow RBI events, as event outcome, after the outcome already crash will happen, so be aware of that. You may risk after the event, or risk a bet can be to take long straddles and things like that. When it gives good profit if the market moves either of the sides. That kind of strategies. But basically, protect your positions always whenever you are carrying forward the positions overnight. Manage your risk, protect your positions as well as per the volatility and as per the risk appetite and the capital and all these things. Protect your capital and have stop losses. That's all that you can do, and study the levels and think of probabilities as per the resistance support that you see in the charts. It may go wrong, no problem, but at least you have something. And stay with conviction. Take the losses as happy losses, small, defined, risk-defined losses as happy losses. Take it and then have the capital left behind to trade another day, right, where things may turn out to be better for you. Right? So that's my view. My view is mild bullish for the next day. I hope this has helped you someday. See if it has benefited you. This chart analysis and technical analysis study has benefited you some way. Then please don't forget to subscribe and like, comment, and all feedback you can give if you think you like it. And please share to maximum so that we get some subscribers. So we have very few subscriptions, and this keeps motivated to keep doing this every day. Thanks for watching. Happy trading, happy learning, happy investing.